Hey everybody, Matty here with Altcoin Buzz. Happy Saturday, happy weekend. Today we are exploring 3 key analytical reasons that we will quantify you as to why there is a major and massive cryptocurrency bull run that is inbound. Because we're going to be taking you through quite a bit today, we've also decided to push the giveaway of our Crypto Tag Zeus starter kit to tomorrow. That is Sunday's video, Sunday the 16th of February, so stay tuned for that. Yet again, you have one more day to enter that competition. Stay tuned for details on how to enter at the end of this video. But for now, before we get into the 3 key reasons that are going to usher us into the big next cryptocurrency, altcoin specifically, bull run, let's take a look at the market on coinmarketcap.com. $306 billion right now. Total market cap, price is looking pretty good overall. Bitcoin just about flat on the day, but still sitting at $10,238. Other projects up or down 1% or 2%, as you can see. The big news, however, and something that we're going to focus on more in just a second, is this decreasing Bitcoin dominance figure, now below 61%, in fact, 60.9%. So what does that mean? We are looking now specifically on tradingview.com at the market cap Bitcoin dominance as expressed in a percentage. Specifically, we're looking at the daily candles here, which as you can see go back several months and indicate a clearly decreasing pattern. This is number 1 on our list as to why we can expect a major and massive cryptocurrency bull run. Also, it would indicate that that bull run may be skewing more towards the altcoin. So the number 1 reason of this upcoming bull run is the fact that the Bitcoin price is moving upwards while simultaneously dominance is decreasing. It would be one thing if price were being flushed out of Bitcoin into the altcoins, and that would explain the decreasing dominance. But to have, again, simultaneously the price of Bitcoin moving up and the dominance decreasing is a healthy sign. And in the past few months, the Bitcoin price has been surging rapidly and regularly, and yet the dominance figure has been decreasing. We've been in this territory before. I'm not saying it's unprecedented, but generally speaking, decreasing dominance has correlated with enthusiasm, with an influx of capital into the altcoins. As you can imagine, that has been the trend going back, and it's one that's been cyclical. We've seen it many times over, in fact. So this all symbolizes that there is serious confidence of investors building in the crypto space, and it's an extremely bullish sign for the entire crypto ecosystem. So this fact, coupled with all of the other reasons that Bitcoin is getting bullish, is something that is very encouraging to see. Reason number 2 why a massive cryptocurrency bull run is imminent is the influx of institutional capital and interest from major organizations and perhaps even nation states. Let's go back in time first and take a look at this article. This only from the end of January 2020. Literally no one is trading Bakkt's Bitcoin options. You may remember that we discussed this and there was some very underwhelming performance. Trading volumes in Bitcoin options listed on the intercontinental exchanges Bakkt's platform have completely dried up, even while CME's options product is seeing strong interest. While things have changed quite considerably in the 2 or so weeks that this has been published. So there have been many indicators that suggest that Bitcoin has been getting more and more interest from institutional investors. And some may choose not to care about their involvement. Others do. It certainly varies. It's important nonetheless to know what is happening and the implications, because this is happening regardless of what we choose or what we would prefer. Institutional investors usually don't enter into assets for the short term and add more stability and liquidity in dollars to the space. People aren't getting into Bitcoin or cryptocurrency from the institutional level to line your pockets, to make you rich. They're in it for themselves. So really the best effect that we can see when you have these massive organizations, perhaps even pension funds or countries entering into crypto, what you're really seeing is a stabilization of the space and decreasing volatility. It's not something that's going to make you rich per se. Maybe indirectly you'll see some benefits, but really the direct benefit is the fact that stability is going to increase, volatility is going to decrease. Again, they're not getting into the space in a charitable way to make you rich. They're looking out for themselves. It's therefore safe to assume we should not trust their intentions, and it's important not to lose our precious Bitcoin to them specifically. And therefore sometimes the HODL policy is a good one. So again, from this article just over a couple of weeks ago, January 30th, 2020, we can fast forward to this one here on cryptoslate.com. More Bakkt futures contracts are settled in Bitcoin than in cash. According to the latest data from Skew, the volume of Bakkt's physically settled futures exceed the volume of its cash settled product. With an average daily volume of $14 million in the last month, most traders seem to be attracted to futures contracts that are settled in Bitcoin. Again, this has been a pretty quick turnaround. So you're literally going from no one trading Bakkt's Bitcoin options to a situation where open interest in monthly Bitcoin futures on the Intercontinental Exchange's Bakkt platform has now jumped to record highs. Again, not even 3 weeks is the span that we're talking about here. More Bakkt futures contracts are now settled in Bitcoin than in cash, and these physically settled futures present a bullish case for Bitcoin. Again, the growing number of institutional traders choosing to settle their contracts in Bitcoin presents a bullish case for the cryptocurrency. Arcane Research's January report noted that its data has shown there is a growing appetite among institutional investors for Bitcoin. Diving into that a little bit, Arcane Research reported that the 230 Bakkt Bitcoin futures contracts that went into delivery on January 17th represented over $2 million in notional value. The company only delivered 15, 17, and 8 contracts in October, November, and December of last year. Putting that in perspective, it means that the physical delivery of Bitcoin futures contracts increased by 1,625% from their 2019 average of 13.3 Bitcoin. Again, that's according to research published by Arcane Research. NewsBTC is also covering the interest from institutional players. Data shows Bitcoin's progression from retail to institutional asset. The numbers back up this claim, certainly. The price of Bitcoin is moving irrespective of increase in chatter on Reddit and Google Trends, indicating not much movement from the retail investor side. So we think this fact on its own at least is a major variable that will contribute to the next run of crypto and is extremely exciting to think about and to consider going forward. And now to introduce reason number 3, we're going to go back to our tweet from the 15th of May 2019 when Bitcoin's price was sitting at about $7,700. At that time, we indicated that the price of Bitcoin should be around $12,000 during halving in May of 2020, and this was based on a cost of production per Bitcoin, since that was around $2,800 to $3,000 at the time. Here is the tweet itself, again from May of last year. Mining costs of a Bitcoin about $2,800 to $3,000. Post-halving, it should be about $6,000. And importantly, miners won't sell below 2 times what they're pumping into the production of a Bitcoin. Therefore, by logical extension, a $12,000 Bitcoin is the minimum we expect by May of 2020. This is just the economic side, simple supply and demand. Now, beyond that, you got to factor in the greed. If everybody's looking to scoop up Bitcoins, if the institutional players are showing interest and enthusiasm, you want to sell at below just the minimum. You want to sell at a profit, and you want to take advantage of the fact that people are suddenly interested in your space. Therefore, factoring in the greed, well, it stands to reason that we may see prices beyond just 2 times, beyond just 12,000. That was our assessment, again, in May of 2019. However, here on Coindesk.com, the cost of production of Bitcoin with the constant surge in hash rate that we really didn't anticipate has already gone to $6,851 according to reports. Some are even saying that the upcoming halving combined with this increasing hash rate could send the price of Bitcoin skyrocketing to $90,000 or more. Now that's a little bit hyperbolic. I'm not necessarily getting behind that prediction, but here's a look at some of the numbers that would influence that kind of a statement. In a recent report, the crypto-focused research firm TradeBlock estimates the average cost to mine a single Bitcoin could jump to $12,525 after the upcoming halving, which is expected in May of this year. That's nearly double the average cost of $6,851 right now, the cost, again, of production. So essentially, miners will have to run twice the number of computations with a corresponding increase in electricity usage to get the same amount of Bitcoin they're getting now. And so this leads us into our third reason why we can soon expect an imminent cryptocurrency, Bitcoin and altcoin bull run. It's all supply and demand. Increasing hash rates and an upcoming halving in May of 2020 mean that we're going to see prices of Bitcoin increase, very likely. A rising tide lifts all ships, and therefore, in my estimation, we're going to see increases in the prices of altcoins, and generally speaking, increasing enthusiasm in this space by all kinds of players, whether private, whether institutional, but certainly and hopefully institutional players are going to start paying attention. If you factor in some of these ideas, it can be argued that the minimum cost of Bitcoin around the time of halving can be expected to be at least $15,000, since that would provide at least a somewhat comfortable profit cushion for the cost of production being at $12,500. However, you also have to factor in the increasing hash rate, which doesn't show any signs of slowing down anytime soon. Looking historically at some of the charts here on HODL.com, Bitcoin price history with reward halving days marked. In this logarithmic table, you can see the price progression across the first, second, and third halving and the steady increase when charted against those timelines. The Bitcoin halving doesn't represent any kind of a guarantee. It's all very psychological. It depends how collectively people are going to perceive the supply and demand factors. However, historically speaking, and it's not a huge sample group, we only really have 2 instances at the end of the day really to look back on, but generally they have sparked interest in the digital asset, and they have, across the long term at least, generated higher prices on the whole. We've also more or less predicted this in the past, the fact that forget the mid-May halving event that's coming up, it's happening earlier on account of all-time highs that we're seeing with hash rates, and that is a factor that seems to be influencing things. This by Deepika on altcoinbuzz.io. Again, the first halving of Bitcoin was November of 2012. The pre-halving rally existed and it was robust. You saw increases of 663%. Post-halving rallies saw increases of up to 3,400%. The second halving occurred in the summer of 2016. Pre-halving rally 338% for Bitcoin. Post-halving rally 4,080%. And the third halving, May of 2020. Well, we're already seeing pre-halving rallies of 181%. That is to say that Bitcoin has increased 181% in price in the last year. We don't yet know what the post-halving rally is going to represent, but hopefully it rhymes with some of the numbers that we've seen historically. And according to Forbes, a featured technical analyst, Bakkt Capital, Bitcoin might cross the 17,000 mark prior to halving. At Bakkt Capital here on Twitter, if history repeats itself, Bitcoin will reach $17,000 a few weeks before the Bitcoin halving. And you can read more about that on medium.com. What do you guys think about our 3 reasons? None of this, of course, is financial advice, but if you agree with us, if you disagree with us, or maybe you have another point of view, let us know in the comments below and let's start the discussion on this one. That about wraps it up for today, everybody. Do be sure you're following us on all the regular social media channels and keep checking back into altcoinbuzz.io for all the latest. Go ahead, like, subscribe, share, and hit the bell to receive notifications. Don't forget about our giveaway. It's now happening tomorrow on Sunday, February 16th. We'll be giving away our Crypto Tag Zoo Starter Kit. To be eligible for that prize, you got to make sure you're subscribed to Altcoin Buzz on YouTube. You got to like our videos and comment on videos. That way you have a chance at winning the prize. Best of luck in that competition. Best of luck if you choose to invest on this Saturday. And have a great one, everybody. Enjoy your weekend. And as always, we hope to see you again soon in our next video. Take care.